Hey guys, good afternoon, everybody. Today is Friday, November 25th. So happy Friday, everyone. Hopefully everyone had a great Thanksgiving yesterday. This session is going to be a one-on-one mentoring session with Maria. So I'm going to finish setting up this room real quick and then we'll get started. I'll post up the link if you guys want to join in. But this is going to be a one-on-one directly with Maria. So if you guys just want to listen in and sit to listen to her questions, you guys are more than welcome. So let me go ahead and just finish setting this up, and then I'm going to send the link to Maria so she can join in. All right. Looks good. Let me get this link sent over to Maria.
Hi, Chow.
Hey,
How
Maria.
you doing?
I'm doing great. How are you?
Fine, fine. Thank you. Waiting for the meeting today.
Oh, yeah. No, definitely. Yeah. So here we are. I know you sent me a list of questions, so let me pull that up. If there's anything else that you need help with, feel free to add on to it. But, I haven't really looked at the questions. I took a glimpse of it when you sent them to me, but I haven't really looked at it. So I guess we can go over these one by one. Is there anything that you want to cover before we go over the questions, or do you want to just knock these out first?
No, I think it's enough. All that I wrote you.
Okay, perfect. Yeah, no, great. Okay, so let's see. Let's start off with the first question. So your first question right here is the high-low quick scalping strategy that I was applying 3 weeks ago was very productive for you. That's great. You said these strategies that I've been applying the last 2 weeks seem to provide you very few opportunities to take an entry, which is correct. It's only two strategies and you have to align the trend. So we did discuss this last week that, when it's not trending heavy, you're not going to find too many entries. When the market is trending, obviously you're going to find more entries, but yeah, you're going to find a lot less than you were probably taking when you were applying the high-low quick scalp. So to add on to that, you're asking, do you consider that the high-low quick strategy is sufficiently proven to be good, or should you center your trade on the two most recent ones that I've applied? So quick answer to this question would be, I would recommend applying what fits you best, right? Because the only reason I changed to those two strategies is because I just want it to be more linear so everyone can follow these specific strategies. But if the high-low quick scalp strategy works very well for you, then you should go ahead and apply it. Every strategy that I introduce works very well. It's been tested through many forward testing trading days. It's also been tested by Maddie. So that's actually Maddie's favorite strategy. So if you like that strategy, you're more than welcome to apply it. I do think, oh, go ahead, Maria, go ahead.
No, he told me.
Okay. Oh, he told you. Okay, great. Yeah, that's his favorite strategy. So like on the live session, you'll see sometimes he'll just pop into the chat and he'll mention, there's a high-low quick scalp that he's taken. And I don't personally take it because I just don't want to confuse people. But if you like the strategy and you know how to follow it properly, then I'd recommend you just keep using it. The main thing with that strategy though is that you get a lot of quick entries. So if you don't catch it right away, you're going to miss it. And I'm sure you've seen that before where maybe you've entered a second or 2 seconds late and it's already hit profit target and then it pulls back into drawdown, right? So, so when applying that strategy, as long as you apply it properly, then I would just keep applying it.
Okay.
Yeah. And you get more entries. So you can take like maybe a smaller lot size, but you can take, maybe 5, 6, 7 entries. But if they all win, then you're perfectly fine.
Okay.
Okay, let's see. So we're done with that question. Next strategy or next question you have here is, what strategies should you use for a trending market? So for a trending market, I would recommend that you use the ones that we're applying. So like the main one that I would recommend would probably be the momentum scalp. I know I haven't made a video on this yet. I'm planning on making it very soon. I think this would be best with a trending market. The reason for this is because since you're applying it on multiple time frames, you'll know what's going on, 10 minutes from now, you'll also know what's going on 5 minutes from now, and then your entries are going to be on the 1 minute. So if the 10-minute and 5-minute both say we're in a very strong bullish trend, plus you have a bullish momentum, it's a no-brainer for you to take it on the 1 minute. So are you referring to like scalping, or are you referring to like
No, for scalping.
Okay, yeah, if you're going to do scalping, I think this one's good. I mean, you can tie this in with the other one that I'm applying to. So aside from the momentum scalp, you could, if you want to be very accurate, this is basically the ones that I apply during the live session. So typically I'll look at one or the other, but if they both align, then I'll typically take that like for sure, and then it usually hits. So if you want to use this, or you can use them in conjunction. So like what you can do is you can look for the overall trend with the 3 timeframes, just to make sure that it's very bullish or very bearish. And then if you see an entry here with a high level momentum, pivot scalp, you can also use that to take your entry. Or if you just want to use one or the other, I think either one's fine. But I think this one's very accurate. The reason why it's very accurate is because you really have to focus on like when the market is really trending. Not only like on one time frame, you're looking at multiple time frames. So you need everything to line up before you can take something. So I think this would probably be your best one for scalping. This is like one of my favorite strategies.
For scalping, okay.
Yeah, for scalping. It's a little, I wouldn't say it's difficult, but I think it's just a little more work. Once you are used to looking at the entries, it becomes a lot easier, because mainly you'll be looking at the 10-minute. If you have, the bullish trend here, bullish momentum, then that's already checked off. You don't have to look there anymore. You look on the 5-minute, same thing, that's checked off. And then now, once you have that all set up, you'll just focus on the 1 minute here. When you get an entry, in the direction of momentum and trend, then you can just enter it right away.
Okay. When one of the momentum signals is blinking, it's better to confirm in the next candle.
Yes.
Correct?
Yeah. I think that would be best. Yeah. So I know we took a trade this week where there was a buy signal here on the 1 minute, but the 5-minute kept giving, a sell signal. So what we did was we just waited. We saw a buy signal come up, and then it was not a great entry, but then it came back. I think it was one that we took. Let me see if I can find it here. It was one that was it was going around for a while. I think it might have been this one here, or one of these, where
I think was Tuesday.
Tuesday. Okay, let me see if I can find it here. I think it might have been this one. I'm not sure, but yeah. So this is like one where it came up, but the sell signal kept coming up on the 5-minute. So we probably would have waited. I think if this is one of the first ones that hit right away, but I think there was one that happened right after. Yeah, right here. So the sell signal kept coming up for this one at 7:16, and then at 7:31, it came up again. So there was one here, and I think this is the one that we were talking about. It hit TP, and then the 5-minute kept showing sell signal. But once it stopped showing sell signal and another buy signal showed up here, it went straight to profit target. Okay. So yeah, if you want to be on the safer side, if you do see a pending signal, like say on the 5-minute or 10-minute, then maybe just wait for that one to close, because it'll just correct back up on the next one.
Okay.
Yeah, it's all preference though. If you don't want to wait for it, then you can take it, because like, for example, here with this entry, it did retrace very hard, but if you took it anyways, it would have just came back up eventually.
Okay.
Yeah. Okay, so let's see. Let me go over to your next question here. Next question is, could you tell me what strategy can be used for markets in a wide range? Yeah, sure. So again, for scalping, right? Not for intraday?
Yes, for scalping.
Scalping, yeah. So you can use these same strategies even in a wide range. So let me see if I could find, probably not going to see anything here. You'll see that my symbols are a little different too, Maria.
Yes, because they are futures, no?
Yeah, futures. It's the same thing as US 30, but this is like the actual asset. So the future is the main one. The US 30 is just a copy. So US 30 copies what YM does. What I did with this is I ended up paying for this, because you have to pay for this data. It's not very much. It's like $4, but I just want to use it because the past couple of weeks the data has been not so good on currency.com. So I just paid for this to see if it's better. If it's better, then it'll be beneficial to everybody, because on our live sessions you guys can see the real-time data. So I'm just using this for now, but it's pretty much the same thing.
Okay.
It's just you don't see like choppy candles, like where there's, you know, data gap, where sometimes price will push up and there's going to be like empty candles here, but then the candle shows up very high.
Yes, yes.
So it's not necessary, because when everyone's on the live session, you guys are looking at my chart anyways.
Mhm.
But I just want to give you a heads up so you're not confused that it's a different symbol, but it's the same thing.
Okay.
Yeah, so let's see. Let me see when the market was ranging. It's gonna make this bigger. Okay, so I think this is a good example right here. This was last night, so the market was ranging very heavily. Let me just go and replay it. Let me see if this one lines up with the entry here. Okay. Let's see where this crosshair is. Actually, there's no entry there. Let me go back. I have to go to another day because due to the holiday, the market wasn't really moving too much. Let's see. Now let's go back to maybe Wednesday. So this is I would consider, what time is this? 1 o'clock. Yeah, so I would consider this a wide range, or let me see if I could find a better example. Okay, maybe this one right here. Zoom out a little bit. Be perfect. I think this one here is good. Let's see, 525. $23.30. Okay. So let me just show you. So this strategy works good too, because even if price is ranging, if you can see that it's, you know, momentum is going to go in that direction, you can still ride the trade. So the same strategy that I was showing you earlier with the momentum, basically here, I'll go here on the 1 minute to show you the range. You can see that price is ranging. It's in a very wide range. This was happening during Asia session nighttime. So this is right before London session open. You can see that price was ranging right here. It's just going back and forth a lot.
Okay, that's enough space to the price to move.
Yeah, exactly. So it's a lot of space here. So you'll have enough to take your profit. You know, if you're looking for only 100 pips, you know, if price pulls back 100 pips, price pushes out 100 pips. So it's not a very wide range, but it's enough for you to make your profit target, because the session is far away. So if price is to push to the session, you know, typically the session will act like a magnet. So sometimes, you know, price will push up to that point. So if you're going to take a trade here, you can still ride that. There's enough volatility here to, you know, at least hit your profit target before it comes back down. And if you have a stop loss of 300 pips, you have a wide range here. See,
Okay.
so even if it pulls back, you're going to be okay, because it has to really pull back very far in order for it to stop you out. See, like way down here. So even if price goes up and down here, it will continue to, you know, bounce. But since you look at the momentum here, you look at the 5 minutes bullish momentum, trend meter is green, it's above the pivots. Same here on the 10-minute, it's bullish momentum, trend meter is green above the pivot. So even if you hold on to this trade for, you know, say maybe 10, 20, 30 minutes, it might go up, it might go up, might go down, might go up, or might go down. Eventually it's going to come back up, right? So it doesn't matter if it's a messy trade or something like that, because even if it bounces around like this, the odds of it pushing back up, like picking up speed, would likely be around here midnight, because when London opens, that's, you know, the turnover of session. So you might get a slow move here, and then all of a sudden London session comes, and then this is where the price may start moving. So let me just show you here the actual entry, or we could leave the range up. Let's see. So entry would be right here. Profit target is 100 pips, stop loss 300 pips. We have this over here aligned with 5 minute and
10.
And the 10 minute.
Okay.
So you have that right there set up. Let's see if it pushes. So you can see right here, it does retrace a little bit because it's ranging. Retraces a bit, and then finally it goes back up closer to London Open. And you can see this trade is ranging, so it takes a long time for it to actually hit, but eventually it does hit. Typically you'll see it like within a few minutes during New York session, but right here, it took about maybe 1, 2, 3, 4, 5, 6, 7, about 8 minutes for it to hit. And then it went to where we anticipated the sessions, which acts like a magnet. So I think this is probably one of the best strategies to apply in all types of markets. Only when market is consolidating, that's when you don't want to use it. When you have a big range like this, then it's fine. You can take the trade because it'll bounce around, but eventually it'll go in the direction of the bias, which is bullish here. But if it's consolidating, so say for example, like this one over here is okay because the range is big, but I would not take the trade if it came up
there, yes.
Yeah, somewhere around here. Like this is too tight. So wide range, okay. Consolidation, not okay, because the range is too small. So for example, right here, this could be considered the big range, but you can see it gets tighter. So we have the big range there, and then you have the small range right here, right? So this is where you don't want to trade, because if you look at this here, the range of price is only 14 pips. So like you're going to be in this trade for maybe a long time as it continues to go sideways. Eventually, yeah, if you have the bias, because if you look here, it's still bullish. So maybe if you're lucky enough, it'll end up continuing up. You can see it takes a long time. It goes here for, I don't know, maybe 20, 30 candles. It does push up right here, but you put yourself in a risky position when you take a trade like this, because if you're holding this for, I don't know, maybe 10, 20 minutes, eventually it might hit your position, or eventually it might come down. So I wouldn't apply it during consolidating markets, but when it's a wide range, then it's okay, because you have enough space to at least hit your profit target. It might not happen right away, but eventually it should likely hit.
Okay, perfect.
Okay, cool. So let me see the next question here. Okay, so you said, for number 4, I believe that once I understand a strategy, it's not a problem for you to spot an opportunity to enter the market with all the conditions present. Your main problem is managing emotions. So you keep a journal of all entries you take, in which in detail the strategy that gives you the entry signal, but also describe the emotion prompted to make the decision to enter or close. Reviewing this journal has shown me I don't let trades take profit due to fear of losing from what you've already earned. Is there a way to train your emotions and let the positions close themselves? So I think the main thing with this is to, so when you take your positions, are you taking them with the quick trade manager or the depth of market, or are you just manually entering and exiting?
Yeah, with the DOM.
Oh, with the DOM. Okay. So if you're
Yes.
taking it with the DOM, then I would just let the trade run.
But I don't do it.
Oh, what was that, Maria? Sorry, I couldn't hear you.
I have a clicky finger.
Oh, you have a clicky finger. Yeah. So you're watching it and you want to close it when you're in profit, right? It's an issue with a lot of people. With me personally, you'll see me sometimes when we take a trade on the live session, I like purposely do something else. Like sometimes you'll see we take a buy entry and then I'll change the screen. I'll just look at, I'll look at the sentiment. So I don't have to
notice.
Yeah, I don't want to look at it because, even myself, I still get a little nervous when I take a trade. But for the most part, you might be better off just stepping away, right? Because that's when your emotions get worse, when you see the trade, trade going up and down. Like say, for example, enter a buy position here and it goes up, goes down, goes up. And then when it goes close to your entry point, this is where you want to pull out, right? You're right here. And then you want to exit already in profit. As soon as you You exit.
With a small loss, yes.
Yeah, you exit for a small loss or a small win. All of a sudden, it goes straight up, big breakout. So I think for the most part, you should probably just step away. That's like one of my problems in the past. I would take a trade. This is before I did the live sessions. I would just take a trade and then I would go walk my dogs, or I would go downstairs, or I'd go check something else, make some breakfast or something. That's what I would do. That everyone's a bit different. Because even though if you go out and you look and you do something, you're probably going to be checking your phone the whole time to see if it's still in profit. So my main advice would just to step away from it. Maybe go use the restroom or do something to keep your mind off it. Because most of the time, I'm sure, like when you close out early, it typically hits your profit target, right?
Yes, most of the time.
Most of the time, yeah. So you just have to trust it, and then leave it alone. Even if you have to like do something else on your computer, maybe check your email, message someone, do something else, or just talk in the chat. That you just need to find something to distract you within that period. Because if you're trading during New York session, your trade's going to hit within a few minutes, right? Maybe 1, 2, 3, 4, 5 minutes, it'll hit. So as long as you can keep yourself distracted between that time, you'll let the trade run. And I think the more and more that you let the trade run and you just hit your profit target, the more you'll trust it. So like, once you have maybe 2, 3, 4, or like 5 back-to-back wins, then you're going to be okay. You're going to be okay with it. You're not going to be worried about closing early, and you're not going to be worried about losing, right? Because I think that's the main problem. That's why I have a wide stop loss, because it's just a safety net, just in case price does push a little further down. Eventually, I do expect it to come up, especially if we align this with the 5-minute and 10-minute, because if that's the case, then I'm expecting it to push up higher.
Okay.
So as long as you have an idea where price is going, then you shouldn't have too much to worry about. If you're like entering a random entry with no plan, then okay, then maybe you should close it early. Or if you entered a trade and then it didn't actually close with the signal, because that happens sometimes, right? You'll look for an entry and then at the last second the signal disappears, but you're already in the position. So that's where you should probably close early, or just close for a small loss.
Okay, perfect.
Yeah. All right, let me get some water real quick. Let's see, number 5. Okay, number 5 here. You're asking if you had the opportunity to review the document. Oh, sorry, I didn't get a chance to look at that, Maria. Let me see if I can see it here. This one right here, right? The challenge. Let me see if I can pull this up. Okay, so let's see. If you had the opportunity to review the document I sent you, right? Detail the transaction for a bit or for a week. Tab in English. Can you determine if any bad habits I should correct? And if so, how can I do it? Yeah, sure. So let's see. So these are the trades you took. This is good. I like that you did this, because this actually helps you understand, and you take good notes on the trade so you can learn from it. So trade 1, testing position to check account working well. Okay, so for this one right here, high low momentum pivot scalp. I think this one was good. So this one looks fine. Yeah, I remember this position was a little risky. Let's see on trade 3. This one right here, you didn't let the trade close at TP. Okay, so yeah, your trade 3 over here, pretty much it's the same issue that we just discussed. You closed a little early. Yeah, so I mean, for that habit, we would just do what you were doing. Just let the trade run, and so you'll trust the entry, and you won't be closing it too early. See, trade 4, FOMO trading. A friend of mine was doing 900 at this moment, but MVS decided to open another trade. Thought it was a high low momentum pivot scalp, but later noticed price was consolidating, so you took a full loss. Must end my day. Red trading peers. Yeah, no, this happens a lot, where sometimes you kind of ignore the consolidation right here. But yeah, if you look back like the previous, I think 5 or 6 candles here, you'd see that there's like no movement. So
Yes.
yeah, this is something that, and the good thing here is that you understood what the issue is, right? It's FOMO trading. I think there isn't really much that you could have done to fix this, because you you even mentioned here that you entered because you thought it was a high level momentum pivot scalp. Let me see if I can see this. This is on Monday. So let's see, Monday over here. I don't see a timestamp, but I'll see if I can pull it up on mine. Let's see, Monday.
It was during the Zoom.
Oh, it was on the Zoom. Okay. Did we?
Yes.
We didn't take that trade, did we?
No, you didn't take it.
Yeah, I didn't take it. So let me see.
It was my idea.
It's okay. Yeah, I think it might have been. Let me see. This one. Okay. So there was a sell momentum. It was near the. There's a buy signal that came after a sell momentum. Oh, it's this one right here, right? Yeah, so this was on Monday. I don't remember if there was anything else that was around this area. Was there news on that day too?
No, no.
I'm trying to see. Okay, let's see. So this was a, yeah, no, this was a high level momentum pivot scale. Let me check the other time frames over here and see how it aligned, because I know like a lot of trades I've been skipping because I've been trying to align it with the 5 minute and 10 minute. So that might be the case there. So let me see over here real quick. So Monday, 746. Oh yeah, it was bearish. So this is why I would have skipped this trade here. 746. So yeah, this right here. And this is why, like I mentioned, that this is good to use as a confluence, because you would have avoided it too, like I did, because it wasn't bullish on the higher time frames. So for this right here, you could have seen that this could have been a fake out because of that specific. Let me go over here to on 10 minutes to see. 10 minute at 7. Oh yeah, it wasn't a good time to take the entry. Yeah, so just looking at this here, this is the main reason why I would have skipped it. Because if you look here on the 10 minute, you can see it's bearish, right? So bearish momentum, bearish trend. Same with the 5 minute here, bearish momentum, bearish trend. And then this entry here, since the entry is same time, you could have, you probably would have just skipped it, because if you saw it like how it looks there, you would have just, you wouldn't even give it a second thought. You know, you look at it here, you're like, okay, this is bullish and it meets the requirements. But if you're looking on the 5 minute and 10 minute, it's
the prices was
yeah, it's going down. So it's consolidating on the 1 minute, but on the 5 minute and 10 minute, it's going down. So if you look over here, you would have already anticipated that this here could have been, you know, possible fake out. This could have possibly worked out, but since we were looking on the higher time frames, this looks like it could have been a fake out. And I think that's what happened here, right? Price ended up.
Okay.
Yeah, and then it follows here. So this is where you actually would make the entry. So right here, we would have skipped this, like, okay, we're not taking this right now. And what we would do is we actually would take the sell right here, because if you look over here on the 5 and 10 minute, it's bearish. So, and you have the sell signal here. You already know this is probably going to follow, because the 5 minute and 10 minute are leading. So this is just following, it's following late, but following it here, this is where entry would be made. And if you would have taken this way instead, yeah, would have went straight to your profit target.
An easy one, yes.
Yeah, so you see how it's easier if you put them together, because you won't get you'll be in the proper direction. You just got caught here in the wrong direction because maybe you weren't looking on the higher time frames. But you can see how it helps, because the 10 minute is usually leading, 5 minute will be following, and then 1 minute is following later. So if price is going up, but you see the 5 minute and 10 minute going down, then the 1 minute is probably going to follow in that direction.
Okay.
Yeah. So let me see our other trades here, if there's anything else that we missed or that we could cover. Okay, let's see. Oh yeah, so the same trade here again. Said a couple of minutes later, you took a buy without signal, just revenge, feel fear, close with a few bucks, and it went to TP. Yeah. So this one right here, same thing. You're kind of trading off emotion. So like with a lot of these here, like once you have this loss here, so you had two good trades here, one good trade, one good trade. For this one right here, once you would have had this loss, I would have just ended the day, right? For me, like when I have a loss, I know that the market is just not, it's either not trending, it's not moving, or it's not really like there's some manipulation going on. So
Okay.
looking at this right here, if you had two wins and then you have one loss, you'll be in a small loss, right? You're not going to have a big loss because you would have made 1,000. Or for me, since I'm taking 10 lot, I would have 1,000, and then here, if I had this loss, I would use 3,000 or close to 3,000. So I would just be negative 1,000 for the day. That's fine because I come back the next day, make one win, and then I'm back in profit or back at break even.
Yes, yes.
Yeah. So I think for your main issue here is once you start to feel FOMO or you start to, you realize that you took a revenge trade, then I would just call it a day, just take the rest of the day off so that your mindset can reset. Because if you keep trading, that's when you start to revenge trade, over trade, and it's not going to be a good scene, right? You're going to just keep losing and losing and losing, and it's just going to make you more upset and more stressed out. So,
Okay.
Yeah, main advice would just be if you have one loss and it's a FOMO trade or a revenge trade, just call it a day and come back the next day. Let's see, here on Tuesday. So let's see, you took the partial risky entry at New York breakout, called your day, but you were thinking was still thinking on your last day, and chasing price. Yeah. You've seen that I haven't taken a breakout lately. It was a risky week last week, with the holiday, or this week actually, with the holiday. So it was hard to really trust the breakout because even though the breakout was hitting, it wasn't a smooth breakout. Sometimes it would go back and forth. Sometimes it was straight to TP. And I know like it would mess with people's emotion because once it pushes so heavily high, people want to enter late, but once they enter late, it's already too deep in profit. At that point, price probably would have reversed or came back down. I think a lot of the issues too was that price was at the sessions. There was a lot of sessions in the way. So that would have been maybe, another sign to maybe just not re-enter. But yeah, like you mentioned here, you were chasing price, and it's good that it hit, but it's still sometimes it's better to just skip those. For number two, it looks like it says people in the group were showing profits, wins, and you felt annoyed because you didn't let the trade run. You could control your feelings and don't revenge trade, but a few minutes later, you took this buy thinking in another strategy, high-low quick scalp, when you were talking about a sell. At this moment, I could stop trading for the day, but you were revenge trading. Yeah, no, it's again right here, same situation. When you let your emotions get the best of you, you're going to start to make bad decisions with your trading, and it's something that you don't necessarily get good at right away. It'll come back. Like for me, sometimes even myself, I still revenge trade, but luckily for me, I typically revenge trade when like I look at the bias. So like I'm still revenge trading sometimes or over trading, but when I'm doing that, I'm still checking the bias here. So like for example, if I'm revenge trading for a sell, I make sure that everything here lines up. So a lot of the times it still works for me, even though I'm revenge trading, because I'm trading the overall bias. So like even though it goes into some drawdown, it'll come back down. But then once I realize I'm revenge trading, then I'm just, okay, I'm done for the day, because I know if I keep doing that, there's going to be one trade that's going to come and I'm going to be unlucky. So yeah, again, with the same trade, you mentioned that, you're more focused on what other people were posting, and that kind of made you want to take a trade. And unfortunately, you ate the loss on that trade. So,
Yes.
I mean, it's okay. It happens. And it's not something that you'll get better at over time. I think you just have to focus on, this goes back to just focusing on maybe one strategy or two strategies. I know you like a high-low quick scalp. But yeah, again, right here, you said that I was talking about a sell. So, and you took the buy here instead for the high-low quick scalp. So like in this case, if you took the high-low quick scalp for a sell instead, you would have done better. So I think if you apply the high-low quick scalp, you should still look at the overall bias here. So for example, you have a sell, even though you think you have a buy for a high-low quick scalp, even if you take a revenge trade for a high-low quick scalp, but everything is kind of, going downwards. Like for example, this one right here. We have a high here. The next candle would have been a high-low quick scalp. So right there, you could have taken this as a high-low quick scalp. And you would have hit your, your TP right there, of course. And then if you just keep taking them for sells here, again, price pushes up. Again, right there, another high-low quick scalp, right? You have
yes.
2 wins, right? So this is it's starting to make sense, right? If you
there is 2 more to coming in this site.
On this one right here, yeah, more. There was more. Yeah, I think it comes up again. Right there, another high. Yeah, you would have had another win there. So that would have been, yeah, 3 wins there.
A little risky because of the session.
Yeah, exactly, the session. So I probably wouldn't have taken the trade here, but I know Maddie, he likes to take risky trades, and some other people too. So you could have probably taken that. Yeah, and this, I think it keeps going too for a while. Another one right here, I believe.
No, yes, it is. It is another one.
Yeah, no wick. Oh, and then it gets close to the sessions there.
There was 4 or 5.
Yeah, almost 5 right there. So you had 1, 2, 3, 4, and then another one right here, 5. So you would have had a lot of opportunities. This is why it's important that you look at the overall direction, because if you can see that price is down on the 5-minute and 10-minute, you just keep riding the high-low quick scalps in that direction. So yeah, I think you should use this, like maybe keep 3 screens up like this. And then when you see that it's, trending down or heavy momentum down, then in that case, you can just pull up the 1 minute. And then now you can just focus on, your high-low quick scalps for sells.
Okay, perfect.
Yeah, because it looks like you could have found a lot of entries here as price continues to, move along. So let me see over here if there's anything else. Yeah, trade 4, you said that at this moment, you're just fully frustrated with yourself, SR rejection, but you closed it manually. Yeah. So this is what happens. So like, see when
a little $24 of win.
Yeah. So you can see it once you start to get emotional, you start to take a lot of bad trades, like not bad trades, but you take trades.
Bad decisions.
Bad decisions. You're not fully confident. Like you're not there, right? So like, for example, here, you took your first trade. If you just took this for 1 day, you would have been good. You already had your profit, but then you did a revenge trade here. So you lost. Revenge trade here again, you win. Revenge trade here again, you win. And then here again, your revenge trade. Well, not really a revenge trade, but you said you felt more confident and you took another trade, but it just wasn't a proper setup. You just kind of took it because you wanted to enter a trade, right?
Of course.
Yeah, and that's always the problem. So it looks like you actually did good here, or so then you had a loss yet at the end. So if you had the win here, the 1 loss here, and then the rest are wins, you would have had a good day. But then at the end, you said a minute later another trade without a signal, and then you had full stop loss. So this is a sign. On the first trade, maybe okay, take a break. On the second trade that it's FOMO or a revenge trade, then better to just close your
that's for the day. I go. Yes.
Yeah, don't take any more trades. You can still stay on the live and just watch our analysis, but maybe not actually trade. Or what you can do sometimes too, so say for example you want to trade, just go on TradingView and then open your paper account, right? So if you want to trade here, just you go trading panel, you go to paper trading. And then from here, you can still trade, but you'll just trade paper account on TradingView. This will help you still be in the game. Like, sometimes you want to just trade, but at least you're not going to be risking your account. Like maybe you'll have wins, have losses, and you'll get FOMO where you wish it was your real profits, but at least you're still practicing if you want to. Yeah, I think that's the key thing. Just close your MT4 and then open your paper trading, and then you just trade here on TradingView.
Okay.
Yeah, and that'll probably be beneficial. I think that's going to help you a lot because you won't be so stressed out about your challenge. I think that's the problem with most people. The challenge goes, you have such a good week, and then all of a sudden you have a bad week, and then now you're stressed out because you realize you could have just not traded and then you still would have been good, but you don't know until it happens usually. Yeah, okay, here on a Wednesday, I took the breakout, price began to close. follow and you closed it in your entry price when price reaches TP instead of 5 pips. Felt miserable. I didn't decide to trade for the rest of the day. Yeah, no, that's a good decision. If you don't feel good, it's best to just just take a break for the rest of the day. I feel like a lot of people, they want to force trades because they feel like they haven't accomplished enough that day. But it's better to close out the day with some profit or no profit rather than having a loss, because then you'll be in the negative, for the next day. Looking over here on Thursday. Oh, so you traded on Thanksgiving, it looks like. Wait, is this from this week?
Yes, no, the last
Oh,
week.
previous week. Okay. I was like, I didn't realize I thought this was from yesterday. Okay, so last Thursday you said decided not to take the open breakout, high-low scalping, wrong signal, full of mistakes. Yeah, so you just I think for this here, if you want to focus on the high-low quick scalp, just focus on looking at the long-term direction. So just make sure the 5-minute is bearish, 10-minute is bearish, and then you just focus on just the high-low quick scalp. You don't even have to look at the strategies that I'm looking at, because you like the high-low quick scalp. So you should just probably focus on that one only, so that you can continue to build on that, because this is going to build your confidence. If you focus on just one strategy and then you and I think you have to set a goal, because for this, there's a lot of entries that will come up. So maybe set a goal to how many wins you want a day, and then just watch the rest of the day. Just close your account and then watch the rest of the day. I think maybe 3 wins might be good for you, 3 to 5 wins, or even less, maybe 2 to 4 wins. Once you have 2 to 4 wins, you could just close your MC4 and then you'll be happy for the day, right? You'd be happy. And then the next day you're in a good mood. So you do the same thing again, 2, 4 wins. The next day, good mood, 2, 4 wins. And then at the end of the week, you have so many wins and no losses. So I think that should be like maybe one thing that you can try, because I can see here your days kind of change, right? Sometimes you have like 7 trades, like on Tuesday, 7 trades, Monday, 5 trades, Wednesday, 1 trade, Thursday, 4 trades, and then Friday, just 2 trades. So there's not really much consistency here. Like you don't really have a goal. You kind of just trade until you lose. That's what it looks like. You trade pretty much until you lose, and then you keep trading because you're revenge trading from there. But if you just trade, like for example, I saw here you had a win. This is a FOMO trade, but if you skip this, so say for example Monday you took this trade, you win. Second trade you win. Third trade you win. You skip the fourth because this is your FOMO trade. If you didn't take this, you'd have been okay. And then you would have taken this last one, you would have 5 wins or 4 wins on Monday. So you'd have been a great day, no losses. And then Tuesday, same thing here, right? You took the partial move, you would have had a win. This one over here, you just took a random trade. There was no entry. You could have skipped this one. Then you wouldn't have revenge traded here. See, because these trades, it's like a domino effect. If you just took this one here and you didn't take this trade, the next one, you wouldn't have revenge traded here. And then you wouldn't have revenge traded here either. It looks like a pattern, right? Usually if you have a good trade, you're followed by a FOMO trade. So you have one good trade and you have one that doesn't follow your rules. And then after that, you have like more losses because you keep just revenge trading that initial loss. Yeah. And then Wednesday here again, you took the breakout. And then you made the mistake here with the revenge, or no, this is Thursday. So you didn't take the breakout, but you made a mistake on here. So here you had a loss. And then here you said another trade without signal. Right here, this is a revenge trade. Basically, we're just trying to make up for the other loss or the small win here. Yeah, and it looks like the same thing. So I think your main problem here is just you're reacting like right after the loss. So I'm looking at your trades here. You have a trade here like where you had a win, or you said you didn't trade the open, but then you entered again right next to it, right here, or you missed it actually. You were frustrated in the perfect signal, but you didn't let it run. So yeah, I mean, looking at your trades here, the thing is, it seems like your biggest issue is just your emotions. You're kind of comparing yourself to like other people's profits, and you're feeling that you need to make that same profit. So I think one of the things that you might want to do is just to ignore everyone's profits and just focus on yourself, right? Focus on that one strategy, the high-low quick scalp. If you can focus on that and you can just make, at least maybe 1 or 2 wins a day, I think, even just 1 or 2 wins is fine. It's going to give you confident so that the next day you just get better and better and better. That's why for me, like this whole week, we had no losses. And that was because I just, I stuck to the game plan. I took a couple of trades on Monday. What did I take? Let me see. I posted the profits here. Yeah, so it was a good week for me. Like on Monday, I took one trade. And then I know I didn't FOMO into anything. Tuesday, we took a lot of good trades. And then Wednesday, I was a little more careful. But like pretty much all of them were just straight wins. And then the Forex trades hit too. So it's even better. So, I mean, it was a good week for me because I didn't really FOMO. And I kept reminding myself because I know that I typically will trade. Usually holiday weeks are not good for me because I start to take more risk because I think that, we don't have trading days on Thursday and Friday. So I have to make more on Monday through Wednesday. But for me, I don't even look at the profits anymore. That's like one thing I told Maddie. Like I don't even show my other accounts. I just show my FTMO because those are my main ones. I just look at the wins. Like that's really what I focus on, just winning. And I think if you do that too, you just focus on winning and not really the profit. Because you can see here, also you took notes or you closed early because, the profit, like right here, you said at this moment, you felt like $2 was good enough for you. And then it went to your TP. So if you focus on just winning rather than, a number profit, then you'll do a lot better for yourself because at the end of the week or the end of the month, you'll see that the profits really do add up if you just win and focus on not losing.
Okay.
Okay, so let's see. We're done with that question there. Let's see, question number 6. Let me just close this. Question number 6 is the problem that you see when trying to win a challenge is that you have a certain amount of time to do it. I have thought the risk reward ratio of 3-to-1 that we use means that when having a daily loss, it's necessary to obtain 3 winning positions to break even. If I can change the RR to 1-to-1 so that I would need 3 losses to get the same result from the same position. I mean, you can so let me read your question again. I just want to make sure that I get it. So what if I change so you could change it to 1-to-1. I mean, I've been trying to find solutions to that. The problem with the 1-to-1 is that when you're scalping, you don't really get moves like that. I mean, technically you could. So if you're applying something like let's see. So, I mean, you technically could, but it's not ideal for scalping because when you're scalping, there's like news that comes up very often. And if you're taking a trade like that, like say, for example, right here, if you were to take, I mean, you can take these trades. It's not that you can, it's just that it becomes a bit more risky because, so this right here, if you were to take this for a 1-to-1, you put your stop loss at the swing high, you have to cut through the sessions over here. So this is where it becomes risky. And the thing with doing these 1-to-1s is that you're going to have a different lot size. So you have to be really
Of course, yes.
Yeah, so that's the main problem. It's not really like looking for entries here because you'll find entries. Like, for example, there's another one right here for a sell. You'll find it, but you can see how different it is, right? So this goes from like 105 points, 1,000 pips. And, you have another entry here, but you don't have time to calculate that. So this is like 500 pips. And then again, right here, there's another one. There's like a lot of wins that you could have caught here because everything was in a downtrend. But you would have to be able to know your lot sizes because going from a 1,000 pip to a 500 pip move is very different. I mean, we made me and Maddie made the list. I think he probably showed it to you, or I probably sent it in the group for the lot sizes to use. But
in the Excel that I sent you, I had a calculator.
Oh, did you? Okay.
That I made myself.
Oh, let me see. Okay. Oh yeah. Okay, I see it right here.
Sorry, it's in Spanish, but
oh no, you're fine. I could kind of understand. Yeah, no. So I see with your thing here. Yeah, no, you can use this too. Like if you want to do a 1-to-1, the main 1-to-1 strategies that you could really apply would be like the breakout, or that's like easier because you already have a fixed TP stop loss. If you're applying this type of entry, because so if you're doing the high level momentum scalp, then or the high level momentum pivot scalp, this is how it's like technically supposed to be applied. You're supposed to move your TP to the or your stop loss to the swing, and then you ride it, for a 1-to-1. That's how that strategy is. The problem with the strategy that you like, the high level momentum, the high level quick scalp, is that since you're going for 100 pips, it's you can't have 100 pip stop loss, right? Because it's too tight. If you do like 100 like that, the problem with taking these types of entries is that if it does spike up a little bit, it's going to stop you out like almost automatically. You can probably go for a bigger move, but it's risky because the way that we've tested it is that these are like quick moves, like
for 100 pips. Yes.
Yeah, for 100 pips. So like it's not impossible, but the problem with applying this strategy is that the high lows repaint, right?
Mm-hmm.
So like sometimes you'll get a high and then it'll repaint, or like I think it showed up down here. Like these were all good, but I think okay, so like this one right here, there's a high here, and yeah, this 100 pips would have hit, but if you had a bigger TP stop loss, or let me think the next one here. So this right here, you have a buy signal, and then now it starts to repaint. So you can see how it pushes up like that. If you keep taking losses like that because you keep trying to re-enter, it's not gonna go well, right? So like I don't think you can apply a 1-to-1 for the high low quick scalp. You can probably apply the other strategies, maybe the momentum scalp, but even then it's I think it's still like a little bit risky. I mean, if you want to do a 1-to-1, you probably can't do it for scalping, but you can do it for intraday. So that's why like for the Forex trades, those are all 1-to-1 because it's a higher time frame. So those trades have room to breathe. For the scalping though, you don't really have much room here because it's so choppy that in order for you to have enough room, you have to have a big stop loss. And if you do a 300 to 300, it's a very big move. So let me see, for example, here. Yeah. So if you're trading on the 1 minute here and you're looking for, 300 pips so you can do 1-to-1, it's not that it's not going to hit, but it's like if you're doing a high low quick scalp, it's not going to be as smooth as the other trade that you would take. So you can probably do 1-to-1, but you'd have to do it in a higher time frame. Like I've seen Seth in the group, he trades it on I think the 5 minute. He always like messages in the group. Sometimes he'll do a high low quick scalp, but he'll do it on like the 5 minute. So he's doing like 1-to-1. But I personally haven't tried it. So I mean, if you want to test it out and you want to practice, you can probably do it like on a demo account.
Okay.
Because it looks like it. I mean, it does look like it works here. So like for example, right here, if you really want to do the 300 to 300, so this would be a high low quick scalp there. The high was on the previous candle here. So on the next one, that's where your entry, basically would have came in from. And yeah, eventually it does hit. This one works. Let me see if there's another one here. So there's a buy signal here, so you wouldn't take that one, but if there was no buy signal there, this again would have gone through. So you might want to try higher time frames. Maybe try the 5.
Okay.
If you want to do 1-to-1. Yeah, because it looks like it works good here. So another one right here. Yeah, so it looks good. You just can't do it on the 1 minute because the 1 minute is it's too quick. So yeah, maybe try it on the 5. If you want to do the 5, then I would probably recommend you do. Actually, I think you could still use the 1, 5, and 10. Or if you want to even go higher, you can do 5, 10, and then maybe 15. So you can, just move it a bit higher. So maybe something you can try out, but if you want to just stick to the 1 minute, which I think is what you prefer, because I could tell that you like the quicker moves. You want to be in and out very quickly because your trade psychology is not really there yet, not yet. If you trade on the 5, you have to understand that if you take the trades on here, you might be holding these trades for maybe 15, 20, 30 minutes.
30 minutes, yes.
And that's probably going to drive you crazy if you're holding the trade for so long.
No, I could die.
Yeah, no, me too. So the 5 minute, it depends. If you can hold the trade for that long and your trade psychology is fine, then you can try it. But I would recommend do it on demo first, just to be comfortable with it, because you're going to be holding on to those trades for at least 20 minutes, because it's each candle is 5 minutes, and it's going to take a while for it to actually move.
Okay.
All right, so let's go to your next question here.
It's related that to that we are talking about.
Oh, what was that, Maria? Sorry, I missed
Yes.
it. Let's see. Okay, so your next question here on, oh, it's related. Okay.
Yes,
Yes, you
yes.
said, is there a strategy where you can get, yeah, it's pretty much the same thing we just discussed. So you can't risk 100. Unfortunately, that'd be nice. That's like best case. But because the spread is typically like, 20 to 30 pips. So like the problem with that is if you are doing with a 100 pip stop loss, let's see. Yeah, so if you're doing like a 100 pip stop loss, it's too tight, because, so say, for example, you enter, I just want price to come back down. Or let me see if I can find something here. Okay. So, I wanted to see if I could find, so I know this isn't in, we could just use this as an example. I know there's no entry here, but I'll just use this as an example. So say if you were to enter like a trade right here, I know there's no entry here, but if you were to enter something like this right here, and your stop loss is too close, the problem is that when you enter the trade, you have to cover the spread. So the spread is going to be about, it's usually going to be around here. So when you enter the trade, you're actually entering like right here, because whenever you enter a trade, you're like automatically in the negative. So when you enter, you're actually going to be entering right here. So if price does push up a little bit, you get automatically stopped out before it comes back down. So that's why you can't have it too tight. That's why I have it set at 300, because from my testing, this is enough cushion for you to just not get stopped out because of the spread, and then also it gives you some cushion if price does need to retrace a little bit.
Okay.
If we could do a 1-to-1, like a 100, that'd be great. But the problem is you're not going to find a spread that's tight enough to take a trade like that. There's always going to be some spread, and that's going to be that's the edge that the market has. That's why like a lot of people lose, because sometimes their stop loss is too close, and they use it against people. So unfortunately, we can't find something like that. But you can go on the higher time frames. Like if you're on the 5-minute, you can maybe do something like what you were referring to. So for example, here, you can maybe do so like say for example, there's an entry like this right here. If you wanted to do something like that, like even not a 1-to-1, you can do like maybe like a 1-to-2. It's going to take longer though. So like if you can't hold on to the position, because you can see this will take a long time. So you'll take something like this and it works, but the problem here is that you're holding on to this trade for 2 hours. I don't know if you can handle that. It's a long time to hold on to it. Because the problem here is like when price goes down, like say for example, you're in profit. Once price starts to go up, you might get scared. And this is where you're going to pull out early. See, like when price goes up like this. And then if that's the case, then you should have just exited at 100 pips, right? Because if you had 100 pips, you had already been out on the first candle right here. Yeah. So, I mean, it's up to preference. If you want to try it out, you can. But from my experience, even for myself, I don't like holding trades for that long. So I'd rather be out in profit, and then just be sitting and waiting for the next entry. Because there's more entries if you're on the 1-minute versus, the 5-minute or higher.
Okay.
So let's see. Let's go to the next question. All right. And your next question over here is you said, I'm currently losing the challenge with 3%. You have 12 trading days left. And you have thought that the best thing you can do is reduce your risk by lowering the lot size, but aiming to finish the month positive so I can take another challenge at no cost. Do you think December is a good month to do it? So are you asking if December is a good month to do your retry?
Right. Yes.
It's really you really don't know until like the month happens. For me personally, I don't like to base my trades off time, right? Like that's why I stay funded for so long, because I don't really take breaks. I just keep trading, and then if I win, then I win. If I lose, I lose. The time doesn't really change for me. It doesn't matter if it's a holiday, it doesn't matter if it's summer. I'm still looking to take the same amount of trades, 1 or 2 trades, maybe 3 or 4 if possible per day. But ideally I'm looking for like maybe 1 or 2 wins. It's different for me because I'm already funded, so I don't have a profit target to reach. But I think, well, so here's the thing. I think in December, usually what FTMO does is they give you like an extra 20 days. They extend your challenge because of the holiday. So for me personally, I would just do it. I don't think there's there's a necessity to wait, because what happens is, I think what happened last year was some people did take a break during December, and December was actually really good for us last year. And they could have passed their challenge, but they just skipped the month. And then January ended up being the slow month. So
yes, it was.
yeah, so I would just do it. I mean, there's nothing really stopping you. It's just being able to stay disciplined during that time, because I know like December is going to be either slow or it's going to be choppy. It's going to be slow, choppy, or it's going to be perfect. There's not going to be a perfect market. You're not going to be able to predict it's going to be perfect, but you'll know it once it happens.
Okay.
Yeah.
Okay.
So I think that's it for your questions. Is there anything else that you want to cover?
No, I think it is enough. Thank you so much. I will try to content myself.
Yeah, the main problem, I think, because you're doing good. It looks like your trades that you showed me, the trades where you're following the requirements, you're actually doing really good with those. It's just you noted, FOMO trades or revenge trading. That's the only trades where you start to do bad. I think what you can do as well is, if you have a trade idea, you can share it with the group. I don't know if you're comfortable with that, or you can share it with me. Like if you want to just message me like, hey Sean, I'm going to take this trade. I can probably look at it and I can tell you, if this is a good trade or not, because I think the more time you have in between your trades, the more you can think about it. Because it looks like your trades here, you don't really think about it. Like for these here, where you FOMO, like this one, trade 4, you FOMO'd because a friend of yours was doing 900 at the time. So you thought you could have done too. If you would have took a screenshot of your trade and then you posted it in the group, like, hey, what do you guys think of this trade, right? At least you have like a time between where like people are responding to you like, hey, I don't think this is a good trade, so you can just skip it, right? Because I think right here you kind of just took the trade at the heat of the moment and you ended up losing, unfortunately. But if you would have had someone to maybe talk you out of it, you would have done better. So I think it'll help you avoid bad trades. If you want to message, like take a screenshot and just message it to me, or post it in the group, or post it in the Zoom. I think everyone is willing to help you out. Everyone's in the same boat. I think it'll help you become more confident with your entries. Like same for your other entries here. Like for these, there's a couple trades here where you took partial. Yeah, like this one here, you didn't let the trade run into TP. If you would have posted this in the group or something, and Maddie could have commented on it, or I could have commented on it, we could have told you if it's a good trade or not. Because a lot of these trades, it looks like your trades happen when I'm not even trading. It's like when I'm kind of just waiting for a trade. So
yes,
yeah,
when we are waiting.
Yeah, exactly. So if you're doing that when we're waiting, it's probably not a good time to trade. And if you are wanting to take it, you can just post it in the group and I can analyze it. Because if I'm not trading at the time, I can analyze it. I can tell you like, hey, Maria, this is probably not a good trade. Maybe wait on this one. Because like if you asked me about, I think there was an entry here for a buy. Yeah, if you asked me about this one here where you lost the FOMO trade, I would have pulled up the charts and I would have said, hey, Maria, you probably should skip it because the 5 minutes bearish, 10 minutes bearish. Yes. And you also mentioned too, right now, that you said that I was looking for a sell, right? So if that was the case, then, you probably would have avoided that trade. But, you learn. You can't be a perfect trader right away. So I think that'll be best, just to have somebody else look over your trade before you enter it.
Okay, thank you, thank you.
Yeah. So, all right, Maria, I think that's it. Unless you have any other questions.
No, it's fine for me. Thank you so much for your time.
Yeah, no problem. I hope you'll find the consistency. I know you've been trying for a while, but it's, the thing is, my main advice is to not give up, right? A lot of times I've seen a lot of people give up and they just miss it. Like they're almost there and they give up and they come back with so much regret because they see all these other people doing good that they were trading with, and it could have been them too.
Yes, I know I have to
Yeah, no, you'll do it. You just gotta get over
find
your trade psychology.
finding myself, and I know that I understand the strategy, but my problem are my emotions.
Yeah, no, and that's everyone's problem. Even myself, trade psychology, I still don't have it down. So even for myself, I'm still, I'm reading trading books, or I'm listening to my trading books like at least every month to keep me on track so I don't fall off.
You said chapter 6 in trading in the zone?
Yeah, let me check real quick. Let's see. Trading in the zone. Chapters. Yeah, let me see if I could find the chapters here, because the chapters, I think it was chapter 6. Let's see. Yeah, it might be chapter 6. Let me see if I can find the chapters here, because I know Dejan, he was in the group, he was actually asking about it too, because I was listening to it. Taking responsibility. Yeah, maybe check out chapter
4.
Yeah, chapter 4 might be good. State of mind. So this might be good for you. Consistency. It's just thinking about your trade and then aligning your mental environment. So I think number 4 is good for you. You might want to review that if you can. I don't know if you have the audiobook. Number 4 seems good. And maybe chapter 11. 11 is good too.
Okay.
So 11 here, it says to mechanical state. This is like how I trade, right? Because I have requirements. So if the requirements aren't met, I don't take the trade. That's like me being mechanical, like a robot. And then self-discipline. I think this is another thing that you want to look at, because you have the discipline, you just don't have it all the time. You have it like in the beginning, but it looks like, once you reach like the second or third trade, that's where you start to take revenge trades and you kind of just take trades that aren't really there.
Okay. Thank you so much.
Yeah, no problem, Maria. Yeah, if you have any other questions, feel free to reach out. I'm here to help you out. I could see that you're almost there. You just have to start. You have to avoid the bad trades, because I've looked at your trades here and everything's good. It's the only ones that are bad are the ones that you even identify, like FOMO trades or trades that are not even there. If you could just cut those out, I think you should be fine, because I look at your profits here. The only trades you lose are the FOMO trades. Like this is a FOMO trade. This here is you're just jumping in because you saw other people's posting profits. No proper setup. Yeah, I mean, it looks good. As long as you have the discipline, you can cut out all these losses and you can be perfectly fine.
Okay.
Yeah. All right, Maria. So I think that's about it. So if you have any questions, feel free to reach out. Otherwise, have a great weekend, and I'll see you back here on Monday.
See you Monday. Bye-bye.
Yeah.
Thank you.